Hello, hello, hello. Hello, and welcome to TIB, the Immigrant Bag podcast. I'm your host, Modupe Ogunyemi. If this is your first time tuning in, this is the place where we talk about tips and insights to help immigrants secure the bag. As always, we start with a disclaimer. This is not financial advice, and I am not a financial advisor. Everything we say on this show is for education and entertainment only. Please note that investing comes with risks, so please do your own due diligence or consult a financial advisor before making any investment decision. Okay, last week we started an absolutely exciting conversation with a brilliant special guest. And today we are bringing you a continuation of the interview. So sit back, relax, and enjoy the show. My goodness. But yeah, 100%. I love the energy. I love the vibe, and I can't disagree. Like, I can't even argue with that. I can't argue with that. Again, it goes back to the mindset thing that you mentioned earlier. Do you want to believe that you're disadvantaged because you're an immigrant, or do you want to believe that you can do anything and nothing stops? It's almost like this popular saying that I like to share with people that I hold dear to my heart as well. It's the saying by Confucius that says, "He who thinks he can and he who thinks he can't are both usually right." So if you think that being an immigrant and being new in the country means that you can't get into real estate, or you can't get into whatever it is you want to get into, or you can't build wealth, then that is going to be true for you. If you believe that, listen, I succeeded where I'm coming from, and Lagos is one of the most difficult places to succeed in the world. So if you could,
anyone who did something in Lagos absolutely will be the 1% in Canada. Like, there's just no way to even, like, if you came from Nigeria and you landed this country, means you have the resolve. And that resolve is stronger than the resolve that people that were born here have. So there's almost no avenue that you can use to land this country that makes you disadvantaged. Like, I don't see any. So again, immigrants, I think, while there might be some delays with a few things, I think statistically, immigrants are usually better positioned for success.
My next question is, in your experience, you've been in this business for a while now, and, I've picked up from what you've said about having mentors and all of that. So, you have both your personal experience and the experience of the people that you have surrounded yourself with. So my question is, what are the typical timelines, in your experience, within which anyone new in the business can reasonably expect to see returns on investment? Note, I put keyword reasonably. Like, I know that it would be unreasonable to say I put in the money, or maybe it's not, I put in the money today and I'm getting 100x by next week.
I think it depends on a lot of factors. So one is your expectations, your goals. If your goal is short term, I want to make 6 figures by the end of this year. There are a few strategies in real estate that would get you there. I want to build wealth.
Sorry, can you rewind and say that again, please? Because we are going into a new year. We're going into a brand new 2023. I want to secure the bag. I want to make sure all my folks secure the bag as well. We're all straight. We're all good. Yeah. So can you say that again slowly, please?
So I mentioned that if, for example, someone's goal is, I want to make six figures in real estate in 2023, there are a few real estate strategies that can absolutely get you there. If someone else's goal is, I want to build wealth, long-term wealth, that's more long-term. There are also strategies that get you there, right? So when a question comes and the question is, what are reasonable timelines? I would always say it depends on the goal. There are people who are like, my goal is in the next 5 years, I want to quit my job. Right. There are strategies that would help you achieve that. So again, it really depends on what the person's goal is and, what strategy suits that goal. And those strategies those timelines are, those timelines are there. So when you think about for example, wholesaling. Wholesaling has the highest return on time. You could make six figures in 2023, absolutely, by doing wholesaling. With Airbnb, you could potentially make that as well. You probably would need more capital. But when you have things like maybe land development, to even get the permits or to get a few site plan approvals, that takes like a year. So if you say, I want to make this amount of money in like 6 months, you'll still be in the planning process by then. So different strategies have different timelines. So again, depending on the person's goal, what they want to achieve, there are different strategies that have different timelines. So there's return on investment, there's return on time, right? So depending on the question, if you say, what strategy gives me the highest return on time? I would say it's probably wholesaling. If you say, what strategy gives me the highest return on investment? Then again, that depends, right? So yeah, I hope that provides some context.
Yes, and I know we've not gone into the strategies in details, and for that, I probably would, recommend that anyone who's listening to this and who wants to know more about that should sort of reach out to you directly and connect. But can you just unpack wholesaling a little bit and just explain what that is?
So that's the process of, okay, very simply put, it's like lead generation. It's like marketing, sales. You are finding a property that is worth 100K on the market. You find the property and you have it, you register an interest in that property for like maybe $70,000. And then you find an investor who understands that, oh, this is worth $100,000. You have it for 70. Okay, let me take it off you for 80. And then, I have 20K to enjoy. And then you just made 10K for finding that deal, right? So if you find 10 of those deals, that's your 6 figures there. Now, it's very easy to say, oh, I'm just going to find it. But finding it is essentially the skill. People build businesses out of finding these deals. You don't just point to everybody and say, oh, okay, this is what 100K, I'm going to get it for 50. Like, who's going to sell you that building for half the price? So there is a certain skill in being able to find that person, being able to speak with the person, negotiate with the person, create an offer that is structured in a way where the person who you are sending it to can make money. That skill set is essentially, what's called wholesaling. So it has a return on time, because if today I get a property at a discounted amount and I know someone who wants to buy, that's what it takes for me to register that income.
Right. And what are the pitfalls or potential pitfalls of using any or every one of these real estate strategies?
There's a lot. So
I knew it couldn't be so smooth sailing. There had to be a catch.
So there's a lot of pitfalls across all the strategies.
Right.
The one I just spoke about was wholesaling. Relatively low risk, high return, right? Because you find a property, you get it under contract conditionally. So you are not obligated to close on the property. And then within your conditional period, that's when you find someone who wants to buy it at a higher price. If you successfully do that, boom, you've made your money, zero risk, all the return. The risk is if you don't find anybody, you return that property back to the seller. Again, no legal recourse to you. You were never from on the property in the first place. So wholesaling is low risk, high return. Other strategies, the moment you close on the property, that's when risk starts to come. Like risk in real estate comes from ownership of the building, because there's mortgage that you have to pay. So who's going to pay it? If property, those bills are going to come on the first anyways, right? So someone has to pay. So you need to have the money to pay. If you don't pay it, you are defaulting. Who's going to pay your bills? Those bills come every month. So the risk starts to come when you close. And then if you can't sell, that's a problem. If inflation goes up, comes down, interest rates, all the brouhaha that's happening this year, and you want to sell, but your house is worth lower, you've lost your equity. Again, risk comes when you close. But until you close, your risk is very, 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 very small, if any risk at all.
Right. And that brings me to my next question. I think you have a way of sort of linking your answers to sort of like, where my head is at and what I'm going to ask next. What I'm going to ask next is actually about inflation. We all have seen what the market has done. We've seen what the macroeconomic situation has been, not just here in Canada, also in the US, or just basically all over the world. We've seen how that has impacted property prices. We've seen how that has impacted real estate. And, every day we wake up to one new report from one analyst or the other, people say that there's going to be a housing market crash in 2023. Some people saying, oh no, the market is already crashing, or it's there's so many opinions out there. So what are your thoughts on inflation as it is still currently raging, and the speculations of property prices crashing and the real estate market imploded?
Okay. So let me start off by saying the speculations about about prices crashing, like, there are no speculations. Like, it's a fact. It's not a speculation. Like, prices are crashing. Like, there's no clearer fact than that. So I just wanted to call out that no one is speculating about that. Like, prices have crashed, and they've crashed hard. So going into your question, they are crashing because it's a deliberate action from the government. They are doing their quantitative tightening. And what that means is they are deliberately raising the rates so that it doesn't make sense for you to borrow money. So think about it. When they drop the rates to like 1%, 2%, if you earn the salary of 6 figures, 100K, because the rates were so low, the bank gives you money on how much you can pay every month, because you're buying a property, right? So the bank makes money on the interest on the mortgage. So if you earn 100K and the interest rates are 2%, chances are that the amount of money that you earn, let's say 100K after tax, is like 6K a month, or 5K a month. So let's say 5K a month for easier calculation. So you earn 5K a month net. Now, because the interest rates are 1% or 2%, you can afford a $1 million house, because a $1 million house at 2%, maybe your interest payments are like 3K or 4K. I'm just saying, of course, that's probably not the actual amount. But the moment interest rates go up to 4 or 5, that same $1 million house that you bought, for you to buy that same house, the price has to come down to like 500K, right? Because your income has not increased, but the bank is not going to give you a loan on a building that you need to pay maybe 90%. You need to use 90% of the salary to pay. So if they say you must only use 40% of the salary to pay, so you make 5K a month net, they are saying you must only use $2,000 to pay your mortgage, so that they don't burden you, right? So they stress you at 2K a month. Anything that's over 2K a month, they're not approving you. But when the interest rates were 2%, a $1 million house could have been 2K a month. But now the interest rates have gone up to 4, 5, 6, 7, 8%. The price of that $1 million house has to come down to meet that 2%, that $2,000 every month. So as interest rates go up, prices come down. It's like I push it up, prices come down, because salaries are the same, debt service ratios are the same, right? So the moment they stop pushing the interest rate up, then prices stop coming down. So because it's deliberate, it's a cycle, right? It's a cycle. It always cycles out. It's been doing that for years. Like, if you check the history, it's happened like 6 or 7 times. It's going to happen this time around. It's going to happen in the future. It's always going to happen. It's a cyclical thing. So it's just understanding what times we are in, having an idea of how long it can take, positioning yourself for that, ensuring that you stay alive during that period. And then when it comes back, you enjoy the good time. So for people that bought January, February, March, those are probably the most stressed people because, they bought at the height of the market, and for them to pull out any money from their building, they need to wait until it goes down and then comes up and then also goes back to its height again and more than its height. So that's probably going to be longer, unfortunately. But again, if they bought right and, they had people paying their mortgage, and they had like a fixed mortgage, and they fixed that like 1% or 2%, and they had people covering it, then whether the interest rates go to 1,000,000%, it's not their business, right? They are fixed and they're cash flowing, and they're always going to cash flow forever, until those tenants don't pay the rent. So there's a lot of context as to what's happening. But again, my response is it's a cyclical thing. It's probably going to be like this for a while, for a few more months. There's a spring market that's coming up. I know in Canada, I hear a lot that the spring market is always like the market where people rush to sell and, people buy, everyone is trying to buy before the summer. So it's a thing. Now, I don't imagine that the government is going to stop raising rates, because if they do, then everyone and their brother and their grandmother, they're all going to jump in for the spring market, right? Which is going to reverse everything they've done in the past year. So I would imagine that they are going to keep doing what they're doing till the spring market passes. And then that would mean Q1, Q2 again, it's going to be a few months of pain. So these are just thoughts. I'm not the economist at the Bank of Canada, so I can't speak. But those are just general thoughts around what's happening.
Okay, this is where we will be drawing the curtains on this week's episode of TIB, the Immigrant Bag podcast. I'm sure you'll agree with me that it's been an amazing, amazing conversation so far. It's been super insightful and enlightening. Next week, we will bring you a continuation of the interview, so make sure you don't miss it. And on that note, until next week when we bring another exciting episode your way again, this is Modupe saying keep your friends close, keep your money closer, and keep your family closest.